Hard to ask for a better day in the markets. Guys, my name is Hamilton. I'm here with the Trading Initiative. Let's talk about the day wrapping up May 6th, 2024. Great day to be long in the markets. If you've been buying with us over the last week and a half, today has felt incredible. But the question lingers. Was the the April 19th drawdown the bottom? We are increasingly becoming convinced that it was. It's hard to put that call out there with any sort of conviction onto any sort of social media platform. But what I will say is we have been net buyers for the last week and a half, and we have been long through the entire pullback, although we did reduce our exposure. So we are starting to add back. We have been adding back. A lot of the positions that we have put on the books over the last week and a half are starting to really run for us and give us a head start. If that was the bottom and we are headed towards the all-time high area, I think that we're going to be sitting on some really big winners coming in the second half of Q2 and then potentially into Q3. We got a little bit of a head start through earnings, right? So it's not just SPY that ended up big today, up over 1%, but it was also the Qs, right? NASDAQ looking really good here, pushing up, or just to put things into perspective, 2% away from all-time highs in our large cap growth tech stuff, guys. Consumer discretionary comms and tech are really starting to push back up. That's what we want to see in a bull market. And then small caps also moving really well back up and over the $200 area. We are risk on smalls and mids again. Once again, our line in the sand is that 200 price point. I have no problem holding the positions that we have and reducing exposure under the 200. But as soon as IWM is back over the 200 and the RSI is above the 50, we want to start adding new positions and adding into positions that held up really well while the market was pulling back. So small caps and mid caps are doing well. Mid caps, just to give you a little update here, back up and over the all-time high line in the sand pivot at 534. So smalls and mids looking really good here. Total market improvement, right? And market breadth doesn't look bad either. If we actually go and look at some of the market equal weighted ETFs here, you can see that they both ended up green on the day. S&P 500 is trying to work back up on that all-time high pivot at 164, which would be incredible. And QQEW a little bit underneath that all-time high pivot at 120 at 90, but sitting at 11992. So things are looking really good for the market right now. I like it. I'm glad that we've been able to buy over the last week and a half, and I'm continuing to find breakouts that I want to own. And I think that's the environment that we're moving into. We want to own breakouts again. We want to own the market leaders again with some size. Bonds, finally catching a consistent bid. We've talked about this extensively. If bonds stopped going down, the market was going to go ahead and rally, and here we are. Second week in a row where bonds are starting to catch a bid. They're no longer going down, and the market has responded exactly how we expected. We do not have a position in bonds. I don't know if we're going to take a position in bonds anytime soon, but we like the fact that there's a positive correlation between the bond market and the equity market, and right now bonds are getting bought back up. Let's look at the dollar. The dollar, we said if it stopped going up, the market would respond positively, and it did following the Fed decision last week, easing their QT. The dollar responded negatively almost immediately, and over the last few sessions, we have sold off. Our target here is the 200-day moving average. We're going to see how the dollar starts to move around the 200-day moving average. If it breaks below the 200-day moving average, I think the market's at all-time highs, right? The dollar is inversely correlated with the equity market. There's so much importance to the Dixie chart right now. Whichever way the dollar, the Dixie chart is moving, the equity market is generally moving the exact opposite way. I do think that the short-term period of weakness in the dollar could open up an eventual pathway back to all-time highs. And it could happen really fast, guys. If the dollar capitulates down below the 200-day moving average, I think in that scenario, the markets are at all-time highs. And it could be there relatively quickly. I'm talking this week. It could be here this week, at least mathematically. I'm not saying it has to. I'm not trying to make a call that we're going to be at all-time highs. But if the market moves 1.22% per day and we shift click up from where we closed, guys, we could be at all-time highs mathematically by Wednesday. Don't shoot the messenger here, but just simple math dictates volatility puts us at all-time highs if everything goes perfect within the next day and a half. It could happen. It all depends on the dollar. The last thing I want to point out here, other than a bunch of our positions are working now, I'm glad. If you've taken any of the positions that we've talked about on YouTube over the last week or week and a half, you're probably feeling pretty good as well. Make sure that you're closing half of those at 100%, etc. One thing I want to point out, though, is in our market research portal, I had posted a newsletter earlier this morning for the paid side. And I put weekly trends are bouncing and CTAs are bearish. And something that I want to point out is every Monday we go through and we talk through the weekly trend, right? We cut through the noise. Very important to understand that if you're inside of the Trading Initiative, we do not take opinions or bias whatsoever to heart. I don't care what anybody says about any company ever or the market or the state of the economy. I don't care at all. All I care about is what price is telling me and what trends are telling me. It's a very specific way to trade, and it's kept me out of a lot of really bad decisions because people have very bad opinions all of the time. Weekly trends are turning back around, guys. Short-term trends were bearish for the last 4 weeks. They are now starting to turn back around to bullish. Intermediate-term trends were bearish over the last 3 weeks. They're now starting to turn back bullish. Long-term trends were fully intact the entire time. Trends are reversing back to the upside, guys. Don't shoot the messenger. These are simple moving averages, but short-term and intermediate-term trends are starting to look constructive again. But where I think the biggest thing here is CTAs. The NAAIM number is telling us that money managers, professional money managers, rushed to sell off their assets during this latest crash, and they are now criminally underexposed once again. We are 1.5% away from all-time highs, and professional money managers are only exposed at about a 60% rate. That means that there's a lot of money left on the sidelines that these CTAs, these professional money managers, are going to have to use, and they're going to have to buy stocks probably as the market breaks out again into all-time highs. Last thing I'm going to leave you with is this is the exact same environment we found ourselves here. CTAs were very much underexposed into the all-time high breakout at the beginning of Q1 2024. And this is the result. Now, I'm not saying the market rallied like this entirely because of the CTA numbers, but this represents a lot of potential buying pressure, and we can see it in the numbers that professional money managers are not exposed long enough into a potential all-time high breakout. Guys, my name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Give me a follow. And if you want a daily newsletter filled with some of the stuff that I just sent out, you saw that on the market research portal side. If you want a daily scan, etc., give me your email. Link is in the description below. It's completely free, and I will send you one every single morning. I'll catch you in tomorrow's video.